Hey everyone, it's Calvin here. Thanks for checking out the video. I'm back here for some updates on the SPY. Today is Friday, April 5th, 2013. Okay guys, let's get right into the mix. First of all guys, I'd like to apologize for not doing videos. I know a lot of you guys on Facebook are interested in trading and you guys have been asking me to, give you an update. I know a lot of my YouTube subscribers are also itching me to get back. I've been getting requests, so here I'm back guys in the SPY. Let's get right into it. Don't waste any time. Okay, look at today's action. Nice gap down in recovery, but overall pattern I'm seeing right now is a topping pattern. It could be a head and shoulder pattern. Okay, guys, it's not a head and shoulder pattern yet. Okay, you have nice spacing on the left shoulder, nice head, and if we form a right shoulder here, it could be the makings of a head and shoulder pattern. And the price target is 150. I just love flat necklines because they give you a very accurate price target objective. Okay, guys, that's the daily chart. Nice recovery off the lows. Shouldn't be surprised off this nice inside bar pattern. Met target beautifully. As you see these lines, guys, these vertical lines I've drawn in, these are perfect targets that I've drawn out, and it came to fruition beautifully. Okay, guys, I'm not going to go into the details of how I draw targets. Those are for later tutorial videos that I plan to make in the future. Okay, guys, so if you guys stick with me, bear with me, I will eventually teach you guys all my secrets. Okay, guys, right now we did hold this gap up. See this gap up right here from in the middle of March, I believe about March 4th. Nice gap up. March 5th, gapped up, held it beautifully, retested these pivots right here today, and bounced beautifully. Okay, guys, let's go over my trades this week. I did 3 scalps, 3 for 3 scalps. If you guys don't know what scalp trades are, they're pretty much short-term trades. You never hold overnight. They're pretty much can last 5 seconds to 5 minutes to to the rest of the day. You pretty much want to gain as much as you can, get as much as you can out of a trade, okay, but never holding overnight. That's what a scalp trade is. Let's go over the trades I did this week. I only did 3 of them. I'm not dedicated to doing scalp trades. I just do it whenever I'm monitoring, because I'm not constantly monitoring. But if you monitor the market all day, you can pretty much nail every pivot. If you're very good, and most scalp traders do like 15 to 20 or more trades on the SPY a day. I don't trade that way. I only take the best setups. I'm very picky, so I only take trades that are gonna 100% sure win. Oh, there's nothing 100%, but 80 to 90% success rate. Okay, guys, that's why I'm very picky. I only did 3 scalps all week, but usually the most I do is 3 to 4 scalps in a day. And that usually works out pretty great for me. Okay, let's go over the first scalp I did on Monday. Okay, it was a pretty beautiful 50 moving average play. Okay, guys, you want to look at your moving averages for the trend. Okay, guys, and I knew the first hit of a 50 moving average with other factors was going to be a bounce, even though the pattern was bearish. Look at the time frame, time of day, and with this consolidation here, I entered right here long, and this trade lasted 5 minutes. So when you can make 50, 60, 70 bucks in 5 minutes, that's a pretty good gig. Okay, so right here, I entered right here. I did a screenshot for it here, so to give you more detail. I'll post this later, but pretty much longed one E-mini future contract right here. It was also a 382 retrace. With these pivots as well, and it also was a 50 moving average breakdown. Okay, guys, breakdown fake out is usually it sucks a lot of people to go short or sell, and it never confirms below the 200, and it just reverses it all the way. It's just a very common institutional trick, very common to look for. So that's what I saw on that trade. Took money after 5 minutes, and at the end of the day, where did it go? Right here. Pretty much took the money right at the close at the highs. That was a nice 60. I believe it was $68 gain right here in 5 minutes. So a pretty decent chunk of change in that short time frame. That was the first scalp I did Monday. Good way to start the week. The next trade was on the 10-minute chart on Wednesday, when the market just completely just flushed the entire day right here. Okay, guys, and I was on the long side too. This is actually a failed trade. This is an example where trades don't always work. Okay, guys, and you guys have to have an exit plan. Okay, you can't just be praying, oh my God, please go up, please, my money's on the line. No. Okay, look, the reason why I took this trade and the reason why I exited, because I knew it was not working out. Okay, I took the entry was fine. It was near this gap fill. Okay, gap fill. This is a gap fill candle. Okay, usually gap fills are very strong. Okay, but that's not enough to do a trade. What else do we have? We have 200 moving average rising. Okay, off this, it's kind of uptrending here. And if you take away this part of the chart, because obviously in hindsight you can see that it failed, but you're not gonna be able to see this when you're actually trading. Okay, this is all in hindsight here. So when I did this trade, it looks like it was an uptrend right here. Okay, it was starting to uptrend. So the first hit of a 200, that's gonna be good. Okay, that looks good. And I believe there was a Fibonacci retracement here as well. I don't remember, but also gap fill. And I believe on the other time frame there was support there. So I remember it was testing this pivot here. Okay, so this is a pivot high, so whenever it retests it, it's going to be support. I'll draw it in so you can visually see this. Okay, so this is my entry right here. I mean, it was a decent spot. It was not a bad spot. We did get a small bounce, but then this is how you monitor trades. When you see something's not working out, so I entered here. Okay, pretty much flat the whole time. Okay, it's not working out, not working out. It's not bouncing, not bouncing. Okay, you don't just sit there and wait forever. Okay, you wait for a time count. 6 candles. That's when I got out. I got out the very high of this candle. You know what? This pattern is bearish. It's making a bear flag. It's making a bear flag. That means it's going down. So that's telling you, that's confirming that this level is not holding. It's pretty much, you know, it's building energy to break down. That's exactly what happened. So even though I was wrong, you know, all you can't tell the future. You take the best spots on the chart and you monitor your position and you manage risk and you trade it. Okay, you don't just, you know, sit there and on the sideline just praying that it comes back or it works out. Okay, so that's why I got out right at the high of this candle. See this little tail here, this little wick? I got out right at the high, literally at the high. I said this is not, it's not gonna go up. It's gonna break down. And that's exactly what happened. Still took a $30 gain, even though I was wrong. If you know read levels, you know, even though I got out right here, I still, you know, took a small profit. You know, so pretty decent there. Once again, if you do this, you know, 15, 20 a day, these really do add up. Okay, but I'm not that kind of a trader. I'm not that aggressive. Okay, the last scalp I did was just Friday, actually, just at the close, and it was short on the short side. Why did I take this on the short side? Okay, guys. Okay, look at this trend line. Okay, it stands way back. You look for multiple factors when you trade. Okay, you look for multiple resistance levels. This is one level. I mean, I wouldn't never trade off one factor. It has to be multiple things have to line up. Okay, and that's the reason why my success rate on scalps are pretty decent. They're pretty decent. I think I've, you know, probably 15. I don't know. I hardly lose because pretty much I take profits really quick when I get a nice decent gain. I never ride them. That's my problem. But nonetheless, that's in a whole nother video altogether. Let me get back to this trend line. That's one factor. Okay, that yellow trend line. Go back to the 10-minute chart. You also have this pivot low from yesterday's trading. Okay, so this is a pivot low here. That's two factors. You go on the hour chart. You have what? The 20 moving average. First hit off of, you know, starting a downtrend. See how it's sloping down very harshly, very steep down sloping 20 moving average. That's another resistance level. So that's 3. Okay, so you may think, okay, why did I take this level, right? I showed it right here. My entry was beautiful, right here, right in this area. Maybe a few pennies below that, but right in this level. And why did I take it there, not here? Okay, so this is a very important lesson here. When you have two resistance levels that are close by, you always take the higher resistance level to get the best possible entry. Okay. See, if I took it here, I'd probably just be flat. I've been flat to break even to slightly down on the trade. But smart traders they always take the higher resistance level when they're close together, especially when there's volume. Okay, when there's volume, you always look for a pierce. Look at especially the last candle of the day, which is kind of a little risky shorting at the last candle of the day because you don't know what's exactly going to happen. People are just trying to, you know, cover or looking to get out. You know, they don't want to hold overnight, so it's really, I don't recommend trading on the last, you know, or first candle of the day. But nonetheless, it was a great level, and we had a nice up move already, and the measured move met fruition. See this measured move? Okay, this is just another, you know, proprietary technique that you use to draw. Look at it. This is not land of make believe, guys. This is real business. Okay, measured move here, measured move off this bear flag, also bull flag or bullish consolidation pattern also coincides. So I have two measured moves that equal out to here. So that's 4 factors. Okay, 4 factors. Okay, the measured move comes up to here, coincides with this pivot low, 20 moving average, trend line. Doesn't get any better than that. Also, I believe it's a 618 retrace in this area too. 618 actually hit almost a 75% retrace. So that was the reason why I took that trade. Took profits really quickly because I didn't want to hold it overnight. But nonetheless, you know, taking profits is never a bad thing. If you actually monitor my account right here, I'm actually it made a deeper pullback after hours. So that was a decent spot. That proves right there that, you know, charts are king. You know, it wasn't just, you know, guessing. Oh, I'm gonna go short here. Obviously, there's a reason why I did it, and it coincides with these pivots. And you got a nice, beautiful pullback after hours. I got in. Obviously, I took profits too early, but once again, I did not want to trade after hours. That's just not the way I trade. So took the profits, and I'm very happy about that. Okay, so those are the scalps I did this week. Beautiful, 3 for 3, not too shabby. Let's look at the option selling. Okay, the option selling that I did was I did the sell strangle. Okay, the sell strangle is you're anticipating a neutral market, so that's exactly what we got. We stayed in this range perfectly. I sold the 158 call. The reason why I sold that because of this red bar that it formed. It broke down. It has a bearish kind of consolidation pattern, and this was a breakdown, kind of higher volume too. And so even when you get these red bars, that's bearish. That usually means lower prices, and that's exactly what happened the next few days. And worst case scenario, let's say we retraced it, made a nice inside bar. This is going to be resistance. This is your first resistance, major resistance, the top of this red sell-off candle. Okay, because usually the buyers that are up here are going to be sellers. Up here, as soon as it gets up here, they want to get out, break even. Also, you're below the moving averages. That would be a nice reference point there. But the main reference point for me to stop out was any close back above this candle. Okay, so that was an easy trade. As long as you know how to monitor your trades, read targets, read measure moves, you should be. This strategy is very, very, very solid. Okay, guys. So that was the profit on the 158 that I did. Call that I sold. I also sold the 151.5 put. Okay, guys, you need to sell two options, okay, out of the money, one call side and one on the put side, okay, to do a strangle, okay, sell strangle, okay, guys, very, very, a very good strategy that not a lot of people actually know about, surprisingly. But okay, so on the 151 put, I sold this one obviously because the main factor was the 50 moving average. Pretty much the first hit off of uptrend. That's gonna be solid support, and you have a gap fill here. Pretty much a no-brainer, guys. I could have sold the 152.5, but you always want to leave a little bit of buffer room. So 152 would have been pretty safe, but I actually went even lower than that. I did the 151.5. The premium was pretty much the same, so I might as well be more safe than sorry. So that was the sell strangle that I did on the SPY. Beautiful, stress-free money, very consistent, and very proud of that trade. Okay, so another profit in the pockets right there. Let's go over some of these other charts before I go. I know one of my YouTube subscribers was asking for a price line, so let's go over that right here. Just very quickly, just a brief overview of it. Price line, PCLN, right? Okay, sorry, PCLN. Oh man, my brain is fried. Just too many charts. Looking at too many charts today. Okay, so once again, one of my YouTube subscribers was asking for price line way back, so I don't know if he's still around. But what I'm looking in a more macro sense, it had a very nice up move already, and it looks like it's just consolidating in this big range. Okay, it was in this nice down channel, and it broke that channel. Now it's starting to uptrend again, so it looks like it's aimed, ready to retest these highs. But we'll see. Right now, in a more micro sense, it is making kind of a bearish consolidation pattern. So if it breaks the trend line, it could be headed. The first target is heading, well, obviously to this pivot low, and then ultimately this right here, this pivot right here, and then 200 moving average. So okay, if it can stay in this channel, it has a chance to retest the highs, and then we'll see how it goes from there. Okay, let's look at Google, another leading stock. You have to be very cautious when you see the leading stocks like this breaking down. Okay, you can make a case that this is a head and shoulder pattern, and it is breaking down. It did break the 50 moving average, so look for further prices on Google in the more near to intermediate term. Okay, this is not healthy on Google at the moment on the daily chart. Okay, you have to be very, once again, you have to be very cautious when the markets, when the leading stocks like this are breaking down. Okay, let's look at also JPM, which is another market leading indicator I like to look at. It's rolling over. This is very, very important stuff. You gotta look for these divergences where you see the market kind of just floating up, and then you see the leading stocks going down. That's a very clear divergence, and you have to just keep an eye on that and look out for that, and just be aware. Okay, guys, it is below the 50 and 20-day moving average, and it's been below that for a while. Okay, and you are starting to get a death cross here. Nothing to do right now. But what you want to see if you want to go short is a nice bearish pattern into a death cross, and that would be your price. Price entry to short, but right now nothing to do on JPM. Just notice that the financials are weaker than the market, than the overall market. So that's very you have to be aware of that. Usually the financials are a leading indicator. Okay, let's look at Amazon. That's the one I always like to look at. Amazon, sloppy chart pattern right now. Nothing really to do. If you're looking for perhaps a scalp trade, this gap fill with the 200 moving average would be beautiful, and it kind of coincides with the pivot low. We're in this vicinity for a nice day trade perhaps would be decent with this gap fill once again, and this 200 moving average as it slopes up. But I would not be swinging it overnight because of the current setup. Okay, guys, let's look at Apple. Look at Apple. Wow, what a rotten apple it is. Wow, look at this. Tricked a lot of people. I'm telling you, tricked a lot of suckers. I've been calling it out too. Watch out. Get out the way, man. Seriously. Look at this 50 moving average sloping down. Just look at it. I mean, you can't ignore that. A lot of investors get sucked in saying, okay, that's the bottom. Apple's going to recover after it closes back above this moving average. But look at the angle of this moving average. Look at the angle, okay, and that's very important, okay, to look at that. And you got a nice doji candle, kind of set that up, and look at the sell-off. Punished all these investors for chasing this thing. Okay, guys, and now we're all the way back at the lows, testing the lows, and let's see what this holds right here. This is a nice spot, also very nice spot to scalp right here. This low right here. So if you just even you could just identify pivot lows and scalp those. I mean, that's also even, you know, anybody could do it. You know, even caveman can do it. Okay, guys. But I like to look for more factors than just a pivot. You like to line up with multiple factors: a Fibonacci, a price number, even price, a moving average, on multiple time frames. That's what you want to look for. Okay, guys. But that's what I'm looking for right now, looking at on Apple right now. The price target I've been looking for a very long time now is a 360 area. Okay, the reason why, because it has the 200-week moving average. All right, and this middle of this consolidation. Also, I believe on the monthly chart, it's probably like a 50 moving average just on the monthly chart as well. See how you line up multiple charts and moving averages with Fibonacci and consolidations, and that's how you find beautiful spots. You never just go off a price. And a lot of people say, "Oh, I'm going to buy it at 360." Well, why? Just because I like that price. Well, you gotta always look at patterns, because the patterns are always changing. Okay, every day is just another piece of the puzzle. If you're looking at a monthly chart, another candle is just another piece of the puzzle. If you're looking at the weekly chart, that's another piece of the puzzle. Every print of a candle is another piece, and it changes by the day. So okay, so even if Apple gets to 360, I'm gonna have to monitor it, watch the pattern, how it got there, and watch everything. You can't just rely on a price resistance level. Okay, you have to watch for the pattern as well and how it gets there. Okay, guys. Enough of me, babbling. I'm gonna let you guys go. I had a great trading week, pretty decent profits. I'm going to keep trying to do these videos and update you guys. I know a lot of you guys have been asking me to do these videos, and you guys miss them, and I do miss doing them as well. So I hope you guys had a great week, traded it well. Happy Friday, great weekend. Let's do it again next week. Peace.